All right, welcome back. You're still watching Markets Today right here on Metropole TV with yours truly, Nina Chauvin. And in studio with me just to properly understand this Eurobond issue is Rolly Kipkemoi, who is an investment analyst from Nabo Capital. A very good evening.
Thank you so much for welcoming here.
Okay, now, Rolly, we have received the two, or rather, it's fortunate or unfortunate that we are getting the 250 billion Kenyan shillings as another Eurobond, yeah? So I'd like us to start off, for the benefits of our viewers, I'd like us to start off by giving a background check. Let's take a look at this Eurobond journey. I mean, this is something that I've done before on the show, but now we have the cash, yes. So let's take a look at the Eurobond journey since 2014. Kindly, just in layman's terms, take us through it.
All right, this is the third issue that Kenya is going to market. We raised about $2.1 billion. That's about 210 billion shillings. And like you stated, we started this journey in 2014, where we raised about $2.75 billion. That's about 275 billion shillings in current exchange rates. And the issue was in June 2014, two tranches, about 75 billion. And about 200 billion that was issued then, and this is the one that is actually maturing next month in June 2014. So two tranches. One was a 5-year Eurobond, and the other one was a 10-year Eurobond. So 5 years elapsing in about a month, and it actually explains why we actually went to market to get the Eurobond that we're getting right now. Part of the reason why it was the Kenyan government went to borrow was to partly pay for this Eurobond. So $2.1 billion that was raised required June next month about $750 million. So that means it's about we're 36% of the issue will just go to pay off the debt that was issued.
All right.
So that was June 2014.
Yes.
Yeah. Okay. Then the second issue was in February 2018, where we issued about $2 billion. That's comes about 200 billion. It was issued in two tranches as well, of 100 billion shillings each, a 10-year Eurobond and a 30-year Eurobond. So if you do the math, they will be maturing on, one of them will be maturing in February 2028, and the other one will be maturing in February 2048. And then, so those are the two tranches, okay, for the second issue. Now the third issue is the one that was successful yesterday, oversubscribed by, I think, over 300%.
Yeah, over 300%.
300 or over 400%, thereabouts. They haven't yet split on how much the tranches are, the two tranches as well. I understand that one is a 7-year issue. Yes. Another one is a 12-year issue.
Yes, it's 7 and 12 years, yeah.
7 years and 12 years.
Yeah.
So that implies that the 7-year will be maturing in 2026 and the other one in 2031.
All right. Now, really, I want to bring it down to our understanding. Normally, when you borrow a loan, you borrow a loan so that you can start a business, or you continue doing business, and then slowly, as your business goes on, you're paying the loan accordingly. Yes. And I'm trying to make it as simple as possible.
Okay.
How come, and it's unfortunate that sometimes your business is not doing well, so you'll end up going to another bank to get a loan to pay the loan that you'd already asked for in another bank. Okay. And that's how I'm looking at it right now when it comes to this Eurobond. Where is the loophole? What was the first Eurobond supposed to do?
The government attributed it to a couple of development infrastructure in the country. I guess roads, at that time the SGR was progressing a bit. I know the loan majorly came from the Chinese, but similar infrastructure projects that the government would time and again in different financial years plan for. So that was one of the key things. But I like your perspective in terms of when you get a loan, you expect to maybe invest in your business, and this business will now generate cash flows that would, and then eventually now pay off the debt, the revenues that you get from the business. But now you understand that this is a country, and sometimes maybe our systems are not yet where we would want it to be. We consistently miss our revenue targets in terms of tax. Maybe we would want to export more, because one of the key ways a country earns is through the tax that it raises and the export earnings that the country gets. But we are not yet where we want to be. So the fact that, like you see, in this financial year we have about a deficit of about 636 billion budget, about 3 trillion shillings, 3 trillion shillings budget. That translates to a deficit of about 21%. But that is not the fiscal deficit of the country. So it implies that part of the proceeds from this Eurobond will actually go to subsidize this deficit, because the Kenya's deficit is about 5%, 6% there.
Okay, yes. So to the question I asked you, it all comes down to carry and the collection of taxes.
That's one of the various ways that let me say revenue generating power of a country. So ask yourself, how does Kenya earn its money? So that's where it is. That's where it all lies. Through exports, through taxes, one of the ways.
Taxes and exports are some of the ways. Now, so moving on, how exactly, because I think it's only fair that we all understand, how exactly is the Eurobond priced?
The Eurobond, a couple of factors are taken into consideration. One, of course, is the rating that you're given by the international rating agencies. We have a couple of them. We have S&P, we have Moody's, we have Fitch. They're all are American, I think, all of them. And that's, see, investors in a global perspective look at Eurobonds from various countries. So one of the proxies that they would want to, get a view on how this Eurobond is to check what others are saying, like S&P or Moody's or all this, or even IMF, because IMF does a couple of studies. They've done the work. They've looked at the economy. They've looked at revenue or revenue generation. They've looked at our fiscal deficit. They've looked at all those things, and as a result, they feed all that data in their credit model and come up with a score, and so that guides them. That's number one. Number two is on potential for the country. The country could be, say, like, if news could come out today that country X has discovered gas in 5 years, and and at this point in time, country X has issued a Eurobond that will be maturing in 10 years, and if you analyze that this country is putting in the measures to ensure that revenue from that resource is actually tapped.
Sorry for cutting you short, because I just need to throw this in. When the news broke out that Kenya and the government is going out there to actually try and issue another Eurobond, there were questions of will the country actually succeed? And now that the news has come in, we are saying that not only did Kenya succeed in getting investors, they also it was oversubscribed by more than 300%, and this is $9.5 billion. This is contradicting, because any Kenyan would sit down and say, wow, We have so much debt. I don't think we're going to succeed. No one would believe would be willing to actually lend us some money.
Yeah.
So what exactly, take us back, you're trying to mention it, but I need now a proper clarification.
Yeah.
What exactly would send a lender to actually lend us the cash, or an investor? What is the investor saying?
See, for an investor, I have a mandate to invest in a couple of things, all right? And one of the key asset classes that are the common ones, the most common ones, are fixed income and equities. Now, you ask yourself, how is the equities market performing? Of course, equities, higher returns, but higher level of risk. Fixed income, lower level of return, and lower as well level of risk. So you look at the equities market. The equities market over the past about 18 months now have been very volatile, especially in the frontier and emerging markets. If you look at Kenya, like this year, we have lost NSE 20 is about down about negative 6%. NSE 20, NS all share is about 3% positive, but all this, the negative has mainly come about in the month of May, simply because of the trade wars, geopolitical situation that we have globally between the US and China. Now President Trump saying that he's actually considering auto tariffs to Europe, Europe saying that they will not hesitate to take an action. So if that happens in the equities market, then I have no incentive whatsoever as an investor to consider the equities market. I'll therefore probably have the Eurobond market to depend on. And if you look at Kenya, from the revenues that I generate, the amount of money that I'm paying to service debt as compared to revenue or exports is about 20 to 25%. So you can see that this country is generating quite a bit of money. And the yield is interesting. We're talking about, was it 7% for the 7-year tenor and about 8% for the 12-year tenor?
Yeah.
On dollar terms. So no FX exposure to that. You're getting 8% on the dollar. And most of these securities, you'll notice that you're able to trade, as opposed to other than just buying it during issue, other investors will be willing to buy it down the line. So I could just go in and try to make some. It's a good deal for an investor. I could go in and try to make some money from it. Yeah.
All right. Now away from the investors, let's come back down to Kenya. What exactly will the proceeds of this Eurobond be used for, from where you sit?
From where I sit. All right.
You'd already mentioned that, of course, they're going to use it to pay some debt.
210 billion, 210 billion shillings. How much is maturing next month? About $750 million. That's about 75 billion. Okay, so that 6% of that goes straight to pay off the debt. So that's one of the key reasons. It's actually a no-brainer that the country had to go to the market at this point in time to borrow. Just mainly because there's an issue coming up. And then we have a budget deficit of over 600 billion in a 3 trillion shilling economy in terms of our budget. So part of it will, this budget deficit, the government had definitely say that we are going to spend part of this money in ensuring that a couple of things are done. So I think the part of the money will also go to meet that budget deficit, and also finance a couple of infrastructure projects that probably the country has planned in the financial year. Yes.
All right. So we're just mainly looking at the infrastructure aspect of it, and with this particular Eurobond, I mean, already 36% is going to pay debt. That we have massive debt. So 36% of the 210 to 250 billion Kenyan shillings is going to pay debt. Now, even if we are set to pay the money in a couple of years, yes?
Okay.
What will be different? This is the third Eurobond that we're using now to pay debt. What makes you think we want to go even to a fifth Eurobond to actually pay this debt? Because if you were to go to the common man and this is a conversation that I've had with different people with different aspects of life, and they'll go ahead and tell you, hatoni Kenya hii pesa imefanya. You understand? So what assures the Kenyans that we shall be able to actually pay this money? The money will be able to actually pay itself. That's the proper question. How are we sure that the money will be able to pay itself?
Well, first, it's important to look at the maturity profile that all the 3 Eurobonds that we've issued, so that it leaves us with, so it will give us an idea if the government still has the capability of going into the market.
Does the government, from where you say, does the government have the capability
of going into the market? Let's go down. Let's look at it. So we have a maturity, 2019. The next one, it's June 2024. June 2024. That's 5 years. 5 years from now. Then the next one is 2028. That's 4 years later. After that, we'll have 2031. That's 3 years later. Oh, there's a 2026. There's a May 2026. All right. So 2 years later, after 2024, then 2026 we have 2028. After that, we'll have 2031, and then finally 2048. So you can see where the government really has room is either between, unless it issues a 3-year Eurobond, which is probably a bit difficult. So the main room comes between 2028 and 2048. So if it is to issue, now when is the next Eurobond coming? 2024. So if it goes to market in 2024, that would mean it will probably need a 10-year Eurobond that will mature somewhere between 2030 and 2040, or a 20-year Eurobond that will mature between 2030 and 2045. But on your question, if the bond will pay for itself, it goes down to policy. How will the government ensure that it meets its revenue targets? Because that's one of the ways the government, if you have a debt and you raise more through your various income sources, then it would be easy for you to pay off that debt. Okay, so we're talking about revenue. Okay, from taxes is one of them. Kenya is we say that our backbone is agriculture. So how will the government ensure that our agricultural earnings are great? We're talking about tea. Volumes went, was it down last year? Volumes went down a bit last year. No. Volumes went up. Yeah, because of the rains.
Volumes went up. We just lost our top exporter.
Yeah, but that's why it explains why the price went down. This year, volumes will probably go down. Okay, but how will that impact value for tea generally going forward? The government is planning on other agricultural initiatives. We're seeing coffee becoming quite active, and various other agricultural initiatives that the country might have. How does Kenya earn? You need to ask yourself a question on how does the country earn? Okay. Do we have minerals, salt? But that's mainly consumed locally. So I think it boils down to that. Okay, revenue generation. The other aspect is, how do I cut on my expenses? Okay, because yes, you may generate amount X. Okay, you are required to pay a quarter of that X. If you spend 5 or 6 of that X, you'll have a deficit. But if you have a quarter of that X to pay and you only spend half, then you have room to pay for that. So other than revenue generation, probably the government has to check on its current day-to-day running expenditure.
How possible is that?
Honestly, I can't
answer that question.
I can't comment on that.
Anyway, let me just let's wrap this up.
Yes.
So, what exactly does this last, or rather, we can't even say it's the last Eurobond. What does this third Eurobond mean for Kenya's economy?
Okay, definitely. temporarily it will boost our reserves quite a bit. And then if you look at our debt burden now, it means our debt service will have to go up from the current, is it about 400 billion a year of both external and internal borrowings, definitely, because this is quite a big issue that has gone to the market. Then that means our debt service will definitely have to go higher. Now, if you look at some of the metrics investors look at whenever they are the guys who will now come in and buy for the guys who bought yesterday. Okay, some of the things they'll be looking at is how much of your revenue goes to paying debt, and how much of your export goes to paying debt. Okay, and we've seen that we're currently operating between 20-25%. Yeah, some countries like Nigeria are in not a very good state, north of 60%. Okay, so if the debt service goes higher, that means that we will probably even talk about over 30% probably, but it's definitely higher than where we are right now. So that means a good amount of income that we generate will go towards paying debt as opposed to projects in the country, infrastructure, roads, water, and the likes.
Okay.
Yeah.
Now, the last question I have for you, and this is just a general question, human being to human being. Let's forget about the fact that you are an investment analyst. Rolly, the money that we keep on borrowing goes to infrastructure. Most of the times you only say infrastructure. And you've just made it very clearly that the economy driver is agriculture. Don't you think some of the money that is being borrowed, all these bonds and all the debt, maybe if they focused on agriculture, if the government focused on pumping in money into the agricultural sector, would be in a different level when it comes to debt, or when it comes to collection of revenue, or even making the revenue itself, considering agriculture as the same sector. Agriculture is the one that is responsible for the most employment. So why is the government shying away from pumping in money in this particular sector called agriculture, rather than pumping in money into infrastructure?
Well, how can I say it? I think for a long time Kenya's infrastructure has been not so good.
Wanting.
It has been wanting, because a farmer in Nandi or Nyeri, after producing that farm, you'll realize that transporting it all the way from Nairobi before it gets to the port of Mombasa, it takes quite a long time. So that is where the importance of infrastructure comes in. Well, sometimes you have to take a long-term view when it comes to infrastructure. Think about how will the SGR be of benefit to the country 10, 20, 30 years from now. Okay, but I do not say that investing in agriculture would be wrong. It's definitely good, because part of it definitely should be considered in enhancing our agricultural produce and earnings. But do not neglect the importance of infrastructure in agriculture.
All right. Well said. Well said. Well, thank you very much, Rolly. That was Rolly Kipkemoi. We have to shut this down, unfortunately. It's been a good conversation, just breaking it down, breaking Eurobond down, and Rolly has made some significant points. I was trying to bring in an argument with him when it comes to financing the agricultural sector, but everything is clearly interlinked. Agriculture, for agriculture to work, you need the infrastructure. So thank you so much for joining us this evening. My name is Amina Shaban. Don't go anywhere. As I always say, Metropole TV has a lot of programming for you. There's nowhere else you're going to go to get business news or anything to do with your investment. So stick right there. I'll be back with you at exactly 7 p.m. for our Metropole TV news.